Chinese retail investors flood U.S. Embassy Weibo, seeking help to save a share market. Shanghai Stock Exchange implements urgent security checks for takeaways amid poisoning fears. CCP finds Standard & Poor's 2 million yuan amidst a share market crash. Country Garden rumored to liquidate, selling off overseas high-quality assets. China's 2023 economy faces questions over negative growth. Nearly one-third of white-collar workers suffer pay cuts. Shanghai building collapse. Streets flooded with fire trucks. Casualties not reported. It's all covered in today's China Truths. Chinese retail investors flood U.S. Embassy Weibo, seeking help to save a share market. The Chinese stock market is in a severe downturn, and a large number of mainland investors have inundated the official Weibo account of the U.S. Embassy in China. They are requesting the United States to intervene and take control of the Chinese stock market. In detail, internet users from mainland China inundated the comment section of the post titled Joint Statement on the third anniversary of the military coup in Myanmar on the official Weibo account of the U.S. Embassy in China. The post's intention is to condemn the human rights abuses committed by the Myanmar military government. Notably, on this occasion, almost all the little pinks were conspicuously absent. Comments included "Please like America," "Please come to the aid of the countless A-share investors in dire straits," "Save the struggling Chinese investors," "I have a deep affection for America," "We earnestly request the great United States of America to rescue the A-shares," and "America, the world desperately needs your assistance. We need you badly. God bless America," or "Official media restricts our speech, so we turn to this platform seeking assistance." Individuals who once proudly identified themselves as nationalists, or little pinks, have now claimed that their experiences in the stock market have turned them into critics of their own country. Others have publicly apologized for their previous anti-American comments, admitting, "I was not enlightened before, I apologize, and I used to hold negative views about America, but now I've developed a fondness for it." Some netizens have even gone as far as asking for U.S. military intervention and have offered to support such efforts. "Bring your aircraft carriers to liberate us and eliminate evil." Another netizen made an appeal, saying, "Please, Ambassador, turn these comments into a video and share it with media from around the world. Thank you. This place is beyond hopeless. Lies prevail from top to bottom, and we hope you can expose them and liberate the people here." Some Chinese netizens lamented, "People finally woke up." As China's economy continues to decline, the stock market has been consistently falling. However, Chinese Communist Party officials have taken no action to intervene and stabilize the stock market. Instead, they have resorted to threats, attempting to silence those who criticize the Chinese stock market by using national security as a means to intimidate them. Furthermore, they have repeatedly spread false information, falsely claiming that the situation is positive. They have also deleted posts and banned users who have been reflecting the true state of affairs in their online comments. On the same day, the official newspaper of the CCP, People's Daily, published an interview titled "The Entire Country is Filled with an Optimistic and Upbeat Atmosphere." This interview was immediately met with mockery from many mainland Chinese netizens on social media. Numerous individuals attached charts depicting the decline of the stock market to their comments and sarcastically taunted, "The entire country is supposedly filled with optimism and positivity. With over 4,000 stocks waiting to rise, there's supposedly enormous room for growth." Some even sarcastically encouraged the official media to keep up the praise and not stop. Shanghai Stock Exchange implements urgent security checks for takeaways amid poisoning fears. In the context of the tumultuous Chinese stock market with disgruntled investors, a recent noteworthy incident occurred in Shanghai. The Shanghai Stock Exchange issued an urgent notice mandating security checks on all external items, including express deliveries and takeout, due to concerns about potential poisoning. This notice was issued by the Shanghai Stock Exchange Weibo Data Center Management Office and dated January 23, 2024. On February 1, an informed internet user disclosed that a friend working at the Shanghai Stock Exchange mentioned that the company had stopped allowing employees to order takeout due to concerns about food safety and poisoning. Some internet users also jokingly mentioned, "There's word that someone sent a collection of feces." Others humorously commented, "I hope they'll send funeral wreaths, burial clothes, and cremation urns next. They seem to be worried about someone sending a bomb. Those with a clear conscience have nothing to fear, not even a midnight visit from ghosts." Local internet users shared photos and mentioned that outside the China Securities Regulatory Commission, CSRC, there are from 1 police car to 2, and now 3 police cars have arrived. There are also security personnel inside a public bus, and there's also a group of plainclothes individuals. As the stock market in mainland China continues its downward trend, on February 2, the Shanghai Composite Index fell below 2,700 points, reaching a low of 2,666.33 points. The Shenzhen Component Index closed at 8,055.77 points, with a 2.24% decrease. The Chinext Index closed at 673.41 points, with a 2.41% decrease. The BSE 50 index experienced a significant intraday drop of nearly 8% and closed at 773.38 points, with a 4.8% decline. However, the Chinese Communist authorities persist in promoting the narrative that the situation is excellent and in deleting posts and banning users who express complaints from stock investors, leaving them outraged. CCP finds Standard & Poor's 2 million yuan amidst a share market crash. Amid China's ongoing stock market freefall, the Chinese Communist Party's central bank has imposed fines on S&P Global Ratings, China, Limited. This information was disclosed on the official website of the central bank in the Government Information Disclosure section. Observers speculate that the authorities might be attempting to attribute the stock market crash to foreign anti-China forces. In detail, S&P China was fined and warned for failing to conduct credit rating business in compliance with statutory rating procedures and business regulations, neglecting to submit reports to the regulatory authority for the credit rating industry or its affiliated agencies as required, and violating the principle of consistency. The company's former chief rating analyst also received a warning and a fine of 30,000 yuan, approximately $4,212. In the United States, commentator Qin Ping took a mocking tone on the X platform, suggesting that the Chinese Communist Party is finally attributing the continuous stock market decline to the influence of American imperialism. Presently, Chinese investors are grappling with substantial losses. Numerous online videos depict investors jumping from buildings in various locations. Some have even proposed that Hu Shijin, a former party media editor who engaged in stock trading, should also take the same action to awaken the authorities to the significance of the stock market. Country Garden rumored to liquidate, selling off overseas high-quality assets. After China Evergrande was ordered to be liquidated by the Hong Kong court, there was news that something bad had happened to Country Garden. Although Country Garden said that the rumors that creditors would apply for liquidation were not true, the market was still in turmoil. China's home sales in 2023 fell 6.5% year-on-year. According to Chinese investment bank Dongxing Securities, monthly sales in December alone fell 17.1% from the same period last year, and investment in new projects also slowed. The New York Times Chinese website quoted expert analysis that China's real estate crisis has not yet hit bottom. According to statistics from the China Index Academy, new home sales of China's top 100 real estate companies fell 34% in January compared with the same period last year. Home sales contracted sharply. The Hong Kong High Court issued a liquidation order to China Evergrande on January 29. Once it takes effect, Evergrande must enter the liquidation process. The outside world is concerned that Evergrande is over, but China's real estate crisis is not over yet, and there may be a domino effect in the real estate industry. Wang Wangnikan, an assistant researcher at the China Economic Research Institute, since the Evergrande explosion in 2021, the real estate in mainland China has fallen into an unprecedented contraction or cessation. For example, the newly started projects or the selling prices of real estate are all showing negative growth for 20 to 30 months. Under such circumstances, I think it will be difficult for the leading companies, probably the top 50, to survive this year, and there will definitely be a wave of bankruptcies. Country Garden, China's largest private real estate developer, is one of a series of troubled developers. Hong Kong financial media BossMind reported on January 30 that creditors of Country Garden would apply for the liquidation of Country Garden, and a local bank would take over all of Country Garden's mortgaged assets in Hong Kong. Although Country Garden said that the rumors that creditors would apply for liquidation were not true, the market was still in turmoil. Xing Jinping, professor of the Department of Finance at Yunlin University of Science and Technology in Taiwan, said, its so-called assets are properties still under construction, or properties that have been built but have not been sold. So in other words, its liquidity is actually not strong. All kinds of large-scale debt and bond loans are gradually maturing, and their funds cannot be recycled, so there will be a financial gap. Reuters reported on January 31 that Country Garden had put one of its real estate development projects in East London up for sale, with a value of £450 million, or about $570 million. The British branch of Risland, a large real estate company under Country Garden, has appointed Knight Frank, a London real estate agency, to be responsible for the sale of the Country Garden project. Xing Jinping said, the properties it sells in the UK, plus other places such as New Zealand, Malaysia, and Australia, many of their properties where their products are very competitive, the locations are very good, and they are very high-end properties located in the heart of commercial and residential areas. However, their capital turnover is a big problem because the scale is too large. They must now dispose of the best assets around them. In order to stabilize the situation, the authorities continue to relax restrictions on real estate financing, and the so-called real estate financing whitelist is one of them. Wang Guichen said, bank loans to real estate shrank in the first 3 quarters, so banks dare not really support real estate companies without restrictions. Because if real estate companies fail, then these will become bad debts, and the bank chairman may be held accountable. Mainland media China Business News believes that the real estate industry is stalling and needs more and more precise support measures to boost the industry and allow financial institutions to fulfill their duties and be exempted from liability. China's 2023 economy faces questions over negative growth. Nearly 1/3 of white-collar workers suffer pay cuts. The international community has expressed significant skepticism regarding the CCP's announcement that China's GDP growth rate for 2023 was 5.2%, considering this figure to be overly optimistic. Hideo Tamura, a special correspondent for Japan's Sankei Shimbun, has argued that China's real GDP growth rate for the past year was actually in the negative, urging Japanese businesses and investors in China to divest and return to Japan promptly. In more detail, in his report for the Sankei Shimbun, Tamura estimated China's GDP growth using 3 major indicators: real estate investment, net exports, and consumer spending. He noted that real estate investment, which represents over 10% of China's GDP, along with related consumption, such as for electrical products, comprises about 30% of GDP. With a 16.7% decline in real estate investment last year, Tamura estimated this could have reduced China's GDP by nearly 5%. He also highlighted that net exports, the difference between total exports and imports, typically account for about 3% of China's GDP. However, from January to November last year, there was a 32.3% decrease in net exports compared to the same period in 2022, which could have led to a 1% overall decrease in GDP. According to Tamura, the combined impact of the downturns in real estate investment and net exports could have lowered GDP by around 6%. Additionally, consumer spending, which makes up about 40% of China's GDP, lacks official data. Estimates based on total retail sales of consumer goods, which increased by 7.2% last year over 2022, suggest this might have boosted GDP by 2.8%. Yet, when these figures are combined, Tamura argues that China's GDP growth rate for the last year should have been -3.2%. Even when inflation is considered, he suggested that the growth rate should still have been more than -2%, significantly diverging from the official figures of a 5.2% growth rate and a nominal GDP growth rate of 4.6%. Tamura also cautioned that Beijing's concealment of accurate GDP figures only heightens the risks of investing in China, especially following the burst of the real estate bubble in autumn 2021 and subsequent reports of financial instability. The Chinese government's response, including detaining individuals and restricting information, has led Western businesses and investors to drastically reduce their investments in China. Although some Japanese firms have already withdrawn, others remain indecisive. Therefore, Tamura calls for a complete cessation of Japanese investment in China and a swift return to Japan. Furthermore, the economic downturn in China has resulted in ongoing layoffs and wage cuts, with Bloomberg reporting that nearly one-third of China's white-collar workers experienced salary reductions last year, marking a 6-year high and underscoring persistent deflationary pressures. The reluctance of employers to increase wages may further extend the period of deflation in China. Shanghai building collapse, streets flooded with fire trucks, casualties not reported. During the early hours of February 1st, several online videos circulated, depicting the collapse of a building on Sanlin Road in Pudong area, Shanghai. The street was crowded with fire trucks, and authorities had cordoned off the area, preventing citizens from approaching closely. The videos illustrate a sudden and significant large black hole that appeared among the rows of buildings on the street, indicating that the building previously situated in that spot had collapsed almost entirely. Some local internet users disclosed that many people have died. However, the official statement from the Shanghai authorities mentions only rescue operations with no trapped individuals and does not provide information about the casualties. Additionally, the statement "the affected individuals have been appropriately assisted" suggests that the collapsed building may have been a residential structure. As the Chinese New Year approaches, various disasters continue to afflict the Chinese mainland, often resulting in double-digit death tolls. Let us know your thoughts on today's topic by leaving a comment below. If you found this video helpful, please share it with a friend. It inspires us to continue creating more quality and reliable content. Don't forget to like and subscribe for more interesting insights from China Truths. Thanks for tuning in.